Welcome to Requity Insights, a channel dedicated to documenting our journey to 100 world-class communities.
Welcome to today's episode of Requity Insights. My name is Velez, and I'm joined again by my co-host and the CEO of the Requity Group, Dylan Marma. Thanks for joining us again, Dylan.
Great to be here, Liz.
In today's episode, we'll be discussing how to source RV campgrounds, utilizing both on and off-market strategies. Acquiring an RV campground can be a very lucrative addition to any real estate investor's portfolio, but finding the right property can be challenging. Today, we'll explore our strategies to find potential deals and how to evaluate them based on factors such as location, amenities, occupancy, and both existing and potential revenue streams. Let's begin with how did the Requity Group get into the RV campground business, and how did you source your first campground?
Yeah, sure thing. So really for us, it's been a blend of three strategies. We've had direct to seller off-market sourcing, which is primarily through building a list of campgrounds that we have interest in, and then having our team actively call out. We usually have someone that makes calls every day to some campground owners that we have particular interest in, and to see if those owners, just to learn about their goals for ownership and get a sense of if they have any interest in entertaining an offer from us. It's a long-term game, but we try to build a list of every campground in either the region or the country that we have interest in, and just make sure that we have a general pulse on those campgrounds so we can be hopefully first in mind for them when that day comes that they do want to sell. The second type is through broker relationships. So we have a pretty extensive list of brokers that specialize in this asset class. Many brokers in this asset class are national brokers because you can't really just be like a Tampa, Florida RV broker. There's only enough deals to go around and be a broker in that one specific market, unlike some other asset classes. So it's usually either regional or national brokerages that we're dealing with that are focusing on maybe Southeast or nationwide RV campgrounds. And through those broker relationships, we'll get more into this, but it's usually either on market or off market, right? And we usually prefer to see the deals before they hit the market just to minimize the amount of competition we have as we're looking at new deals. And then lastly, we have our industry connections. So there's a lot of other ownership groups similar to us that are either cold calling or reaching out and building relationships with the different owners, or they just maybe have existing long-standing relationships with different owners. And building our presence in this industry gives us these industry contacts that hopefully will think of us and say, hey, this deal's not a fit for us for whatever reason, but we think you guys would be a great fit for it. So they'll refer us a deal, and that could be another great way to source deals as well.
Yeah, absolutely. It sounds like it's a very network-specific thing. You really have to build those relationships.
Yeah, I would say, frankly, there's probably about 30% of each of those strategies, right? Roughly 1/3 of our deals come through each of those strategies. It's not like one of those strategies brings us 80% of our deal flow. It's a pretty even mix down the fairway that we've been able to find deals so far.
Awesome. That kind of leads me to my next question. How important is it to establish relationships with these brokers and other industry professionals? And what tips do you have for building those relationships?
Yeah, I mean, relationships are everything. And I think in the beginning, it can be a little bit difficult because if you're just getting started and you're reaching out to brokers and you have zero track record, especially if you are new to commercial real estate and this is your first time really getting into the space, it can be hard to get taken seriously because they might just be questioning, are you a serious buyer? Do you really have the capital to close? Are you going to kick tires or put deals under contract and drop out on the deals? So that's a tough part. So I think getting clear on your story and being able to tell your story well and to be able to share with the brokers why you're a serious buyer. Maybe if you're partnering with other groups, maybe you can kind of leverage that to some extent. I think it's a great way to tell your story early on, and then in addition to that, building industry connections can come from a lot of networking events. So make sure you're participating. Maybe you have local kind of meetup groups. A lot of times there's like statewide RV ownership groups that you want to become a member of. RVIC is the big one at the nationwide level. Just get yourself out there. Just go to these different industry events and participate with the different ownership groups out there and just make friends. And over time, you'll build that network. And online, is amazing, right? We have so many connections that come to us just from our LinkedIn presence. And I know I don't go on Facebook as much, but there's Facebook groups, a lot of ownership, different RV owners out there that you can network with. So I know early on in my career, a lot of my early connections came from just networking on Facebook groups and LinkedIn and just getting on calls with people, and that sort of snowballs over time.
Yeah, like you said, I think it's just about getting yourself out there, right? They don't know who you are. You don't have that rapport and that track record to be able to be taken seriously from day one.
Yeah. I think a lot of people struggle with like kind of an imposter syndrome early on, especially if you're new to commercial real estate as a whole. But I think that's where you just have to go in with sort of the beginner's mindset, the learner's mindset, to just be there and be curious and don't be afraid to ask all the dumb questions. And eventually over time, people will appreciate you being authentic about where you're standing. And then you'll build the contacts and build sort of the strength behind you to be taken seriously when work with brokers and other potential sellers in the industry.
So when you evaluate potential properties, what deliverables do you consider to be the most important? Like, what are you looking to receive from either the broker or the mom and pop ownership that has these RV campgrounds?
Yeah, so I always joke around with brokers, and I generally say that I don't even want to see a deal by the time it has the offering memorandum. This is not always true, but I love just seeing the raw, trailing 12 income statement, maybe a rate sheet to get a sense of what the rates are, and to get a sense of what the utility system looks like, the existing infrastructure, how many sites are full hookup, partial hookup, how many cabins do they have, what are the ADRs, are they listed on all the major OTA platforms, short-term rental platforms, how are they marketing, are they putting money into Facebook and Google yet, do they have a web presence? I want to see just sort of like the financials, occupancy report, if they do have an occupancy report, and then from there, we can really run with that and craft our own pro forma. Generally, we find that by the time the broker has spent all that time putting together a really thorough offering memorandum, a lot of time it's been shopped and looked at and passed over by a lot of different ownership groups. Yep. Not always the case, so I do want to say there's definitely going to be exceptions for that, and we have deals that have full OM and are listed on the market because we still find tons of value in those opportunities, and sometimes it's just the ownership group choice that they just want to hold off on sharing it with anyone until we go out and bring it to market, and sometimes that's the best way to go as an ownership group. So don't want to say that there's no good deals on the market. There definitely are, and I definitely think that that's the best place to start looking. But we love just seeing just raw financials, occupancy report, and then having a lot of our kind of preliminary questions about the property answered going in.
Yeah, for sure. How difficult is it to kind of navigate those documents that are put in front of you by some of those mom and pop ownership groups?
It can be difficult sometimes. A lot of times you deal with mom and pop ownership groups that just don't have, that maybe not on a fancy booking software, or maybe they're using multiple different softwares and there's no clear picture on what the occupancy is coming from or how much income is coming in per site type, right? So in this business, because you have different lengths of stays and different site types, the analytics can get pretty complex, and that really helps us as operators be able to better predict month by month how we anticipate to be able to perform and what levers we should be pulling to be more effective in our operations. But given a lot of these ownership groups have been doing the same thing for the last 30 years, when you're going in, you have to just look at what their total income is, and sometimes it's a blend, and you really can't pick apart where that income is coming from all the time, or sometimes it's not always clear how much you have. Cost of goods sold might just be flowing through their operating expenses, and it's hard to sort of tie how much of the payroll is going towards managing the store and how much of the different general and administrative expenses are actually cost of goods sold. So there is quite a bit of dissecting the P&Ls to be able to come up with a good, clear look on how the property is going to perform. Yeah. But I don't want to say that in a discouraging way, because when we see that smells like opportunity to us, right? Because that tells us that the current ownership group is not optimizing their income, right? They're leaving money on the table. And a lot of times they know that and they're okay with that, because it's not about making, they might have their mortgage fully paid off and might be sitting on a multi-million-dollar asset and they're bringing a lot of cash flow in, so that they're fine with that, right? Yeah. But for us, we like to find some kind of a value add component to pretty much every deal we do. Yeah. So when we see that there's a lot of areas that the property is not being optimized, it gives us more comfort that there's probably additional upside here, which is going to make it easier for us to be able to make sense of the deal.
Yeah, for sure. I think that's where I definitely heard you in previous conversations say that the underwriting of these RV campgrounds is more of an art than an exact science.
Totally is. Yeah. There's other asset classes. You look at something like traditional multifamily where I get started, and it's very data driven. You can pinpoint down to within a few percentage points exactly what kind of rents you'll probably be able to achieve in that market, and nearly every single line item on your OpEx you can get very granular on what's going to be possible there. But with RV campgrounds, it is not that way. There's not the same data points, and you have to be, lean towards the conservative side on your assumptions. But sometimes you'll outperform your expectations as long as you're being conservative enough on what your initial assumptions are going in. So.
That's great. Going back to sourcing off market, what are the biggest challenges that arise when you find off-market deals, negotiating with existing owners, and what tips do you have for overcoming those challenges?
Yeah, so there's really two different areas that you find challenges with handling off-market deals. Number one is the competition, right? So off-market, usually what happens when it's a good deal, desirable deal, we're probably not the only one contacting them. So a lot of the times you have these interactions where you have an ownership group that's talking to a few other groups, and you don't always have full visibility over what the other groups are doing. And that's actually where brokers come in handy. So sometimes off-market through brokers is preferred because the brokers can sort of make a push for you if you have maybe a more credible group. And the broker also acts as an intermediary to block the groups that want to come in and retrade, right? I think what ownership groups should always be thinking about is who seems most trustworthy to be able to stick to what they're saying, right? So if we go under contract, sometimes there's some groups out there that might just have the mentality of, let me tie it up at any price and then go back in and retrade down the line, right? So we go in and, after due diligence, they already sort of have a premeditated retrade in mind to be able to put it under contract for $10 million and then drop it down to who knows what after a certain point in time, just because they want to win securing the deal and getting it under contract. Now, we try to avoid that at all costs. We really are big on going in and sticking to what our initial game plan is. That's not to say that things don't come up during due diligence that justify a renegotiation, right? If there's material evidence, material changes in the deal that take place, but we never premeditate that and use that as a strategy just to put a deal under contract. And I think that when you have brokers involved, the brokers get to know you as an ownership group, and you can build that trust with them and that reputation for being a group that is easy to work with and has the ability to execute and do what they say they're going to do. So that helps. Whereas when you're playing direct to owner, the ownership group has to be the one to sort of judge that. And this is probably their first time working with any of the groups that are talking to them. So it is sort of the Wild West sometimes with the direct to ownership groups. And I think that's what we deal with, I guess, from challenges with the off-market deal sourcing. And then on the other side, the other challenges can come from working with the ownership groups themselves, especially as we already referenced, just having a lack of data. There's a lot of times that we just have to really do some serious digging through the financials and trying to kind of recreate our own financial model to get a sense of where how much of the income is coming from our long-term sites, our short-term sites, our cabins. What is our expense budget going to look like? How much of these expenses are the owner's personal expenses that are just flowing through the business? And how is that going to change as we take over the property and run it with more of like a professional operating expense budget, right? So, or how much is the owner doing, right? Sometimes the owners are doing $100,000 plus of work per year, right? And that means your payroll is going to go up substantially because they're maybe not flowing their own income through the payroll budget. So you have to kind of see what are the owners doing versus what are the on-site staff doing, and how is that going to change over time, right? So I think that lack of data can sometimes be difficult as well when you're purchasing these properties on or off market, but a lot of times, especially off market, because you're not coming in with the brokers having done some of this work ahead of time for you. So those would be some of the big challenges I can think of.
To your point on lack of data, a lot of these assets in the RV space seem to be like these unique standalone assets. I would also imagine that just shopping the competition is very difficult because they're all so unique.
Yeah, definitely. Well, it's hard to see. You can go on most campgrounds websites and see what the rates are, but it's hard to actually get a picture of how are they doing with their occupancy. You can look on Google, you can drive through it, but you're really not going to be able to tell how your competition is doing on occupancy. So that's where, as a group, you really have to do a lot of dissecting these things and looking at historicals to be able to get a good feel for what a reasonable assumption is when it comes to your occupancy levels in each unique market that you're participating in and don't already have some scale in.
Dylan, how do you guys stay up on industry trends and changes in the market, and what resources do you rely on for that market?
I learned a lot about industry trends just from simply our existing network and our existing contacts. So talking a lot to different equity groups, larger equity groups that are talking to different operators out there, generally have a lot to share about what they're seeing in the market in terms of increased competition, new value add strategies, and different things along those lines. Talking to other peer level operator groups and trying to learn about what they're doing. I feel like that's probably the number one way that we keep a really good pulse, because that's the real time trends that we're able to witness. And then past that point, well, even and also I guess I'd add to that, even on like social media, by following the right people or plugging up the right people, you can also kind of keep a good real time pulse on different trends that we're seeing shake out. And then there's a few industry reports. Woodall's is a very good one. It's Woodall's magazine. They have usually daily publications that cover a lot of different valuable insights from ownership groups and big announcements. So if you can keep up with their daily publications, then you're going to learn a tremendous amount about what's going on throughout the industry. RVIC generally has really great events, and then you have also a lot of their online resources can be really valuable. You also have state campground ownership groups and Facebook groups that can be really valuable to be able to kind of keep a pulse on what other owners in your specific region are going through. You also will have reports published by some of the bigger franchise groups out there, like your KOAs and your Jellystones and things along those lines. The data that's published from the public REITs, reading through the ELS or the Sun Communities 10Ks annual reports can be extremely insightful to be able to get a good pulse on the different trends they're seeing with their income, expenses, major opportunities and threats facing each space. And then lastly, I would say your brokerages. Brokerages, especially there's a few that come to mind that spend a lot of time putting together really thorough reports of what they're seeing in terms of different sales comps and trends and the price per site that we're seeing things trade at throughout the entire country. We've seen reports that even give us pretty granular details on the average operating expenses that we're seeing in different regions throughout the country and things along those lines. So I would say those are a lot of the big ways that we keep a good pulse on industry data.
That's great. Yeah, it seems like there's a lot of information out there. It's just maybe not packaged up for you. You kind of have to search for it and pull from many different resources.
Yeah, definitely.
What do you see as the biggest opportunities and challenges facing the RV campground industry in the coming years, and how will those strategies impact the sourcing of these deals?
So in terms of from a sourcing standpoint, what I think the biggest threats we face are right now, the entire world is facing the same threat, which is rising interest rates right now. So with the current interest rate environment, a lot of ownership groups are still set on their 2022, early 2022 pricing, and they want to be able to get the same price when your cost of capital is now significantly higher than it was. So the way to mitigate against that, or the way to still be able to create a win-win situation, it tends to be seller financing. So we see a lot more seller financing deals going on right now, where now, when interest rates are 4%, not many owners wanted to hold a note for 4% or less. But now when interest rates are in many cases above 6%, above even 7% in some cases, you're seeing a lot more ownership groups that are willing to hold notes at 5 or 6% interest rate. That becomes a lot more common, or some again are even holding at lower rates, just knowing that they care more about price, right? So it really depends on everyone's sort of situation, the tax implications, if they value price or their rate on their loan more. But you're seeing a lot more seller financing come to play. Another threat that I see is increasing competition. So we're seeing big money move into the space from hotels, from multifamily, from self-storage, right? A lot of people are starting to look at this space as they're quote unquote searching for yield, and that is leading to increased competition, and I think will continue to. That said, we think that the space is still very early, and we think we have a pretty healthy 5 to 10 year runway to be able to see a big sort of passing of the guard from these long-term, a lot of times mom and pop ownership groups, to more of your, call them consolidators, right? Your smaller private equity groups or your larger groups that you have. Obviously the REITs have been in the space for quite some time, but you're seeing a lot more of these small and medium-sized investment companies starting to grow within the space. So I think that increased competition is something that we have to kind of keep eyes on and realize is going to be something that comes into play. I like that though, because that means increased liquidity, and liquidity, there's always value in having liquidity. So that also means that we're likely to see better debt options come into play and different ways that we can finance our deals. So I think it's overall net positive for us that more competition moves into the space over time. And then lastly, new developments. Right now, I think a lot of people are waking up to the fact that a lot of these older campgrounds, they struggle to meet the demand that you have for the modern day camper. So one way to go and change that is through the value add strategies, a lot of that which we've discussed in the show. But another way is to build new campgrounds that are built that way from the get-go. And I think you're seeing a lot more of the development of the modern day RV resort, which didn't really seem to be in existence, 10, 20 years ago. So you're seeing this whole new product type, in a sense, emerge in the space, and that's creating new supply and supply with new amenities that's very competitive towards the older supply. So just making sure that you can maintain being relevant with older supply, and you keep a good pulse on the planning and zoning and the approval process in the areas that you're located in, and keep a good pulse on how many sites are coming to market in the areas that you're currently investing into to hopefully hedge against any new development risk or supply risk.
For sure. Dylan, lastly, what advice do you have for new investors looking to enter the RV campground market and source that first deal?
Yeah, I'd say the first deal is definitely always the hardest, and it's not an easy asset class to understand in the beginning. So definitely first proceed with caution. Understand, make sure you spend a lot of time educating yourself in every way possible, stress testing your numbers. Don't go in with rosy assumptions. And it's always, remember, it's easy to make things look good on a spreadsheet, but it's another thing to actually be able to execute on your business plan. So I think it's just being really patient and waiting for that right first opportunity that gives you a healthy enough margin of safety or margin for error, so that even if things don't go as well as you expect, you still are in a healthy position as an owner operator. And then two, I would recommend just partnering with someone that knows what they're doing, getting eyes on your deal from someone that knows what they're doing. And in terms of, from the sourcing standpoint, I think direct to ownership sourcing is great if you know how to tell your story well. I would also recommend getting on all the major brokerage listing email blasts, because when you're able to see those emails come out, you can start to look at enough deals that's probably the best way to educate yourself, is just look at a ton of deals and underwrite a ton of deals, so that over time you have a really good pulse on what your average expense ratio is, what your, what kind of income you can see in different markets throughout the entire country. And I think it's going to build up your confidence levels to be able to really pull the trigger on the first real opportunity that crosses your path.
That's great advice, Dylan. That's all for today's episode. We hope that you found this information helpful. Thank you for watching. And as always, don't forget to like, share, and subscribe. We'll see you next time.
Thanks for tuning in to another episode of Requity Insights, hosted by our team at the Requity Group. You can find recordings of all shows along with our opt-in form to set up a call and view future investment offerings on our company website, therequitygroup.com, also listed in the show notes.